Hello, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. This is a technical look at the euro versus US dollars as we await the Fed meeting minutes coming out at 2 p.m. Well, at the last Fed meeting minute, what do we know? We know that the Fed decreased its number of tightening expectations between now and the end of the year to 2 from 4. The market was expecting 3. And they went to 2, so that was more dovish. We also know Fed Chairman Yellen was more dovish. That's her bias as well. So the meeting minutes, what the market's going to be looking for is that if other Fed officials follow along in the chairman's path, or do they throw up some objections to that argument. You would think that they would all be independent as far as the dot plot goes, and so most of them would have come down, or a lot of them would have come down from 4 to 2. And so, I'm sort of expecting that to be the case, and maybe the euro versus US dollar move to the upside in trading here today after some very choppy trading that we've seen in the market. Maybe the move to the upside is indicative of the market thinking more dovish. Doesn't necessarily mean that the euro is going to continue in that upward direction, but that is what we've seen as far as the price action goes. Now, what are some levels that are important here? And quite frankly, the levels that were important going into last week's unemployment number are still important today. And the key levels that I'll be looking for through the meeting minutes for a break and run, or a break and failure. The first one on the downside is this trend line. This trend line had 1, 2, 3, 4 different points on it. And if we go back and look at Friday's trade, this was the low on Friday, just above that trend line, and this was the high on Friday in this yellow area up here. But let's focus here on this trend line here. The market found support against that trend line. Now, notice what the low did to here today. We took out the low over the last 4 or 5 trading days here and went right to that lower trend line, that old broken trend line. So the market found support against that level, and that was the same line that I was looking for a break through the employment number last week. So if we're going to go lower, folks, we need to break out of that low range, or that low price, which comes in around the 113, 23, 25 type area. So keep that level in mind on the downside. Now on the top side, the extreme that we're looking at, well, I'm sure it looks pretty obvious to you, is this yellow area right here. We have a number of different highs coming through here. Admittedly, we went above the high right through here, but then it was quickly reversed and the market went all the way down to this low right here. And on Unemployment Friday, the market came right into that yellow area and found sellers. So this yellow area is going to be our resistance level. If we're able to get above the 114.35 to 114.65 level, then that should open the door for further upside. Doesn't mean that we're going to go racing up to our high price that we saw in the second half of 2015 at the 117.10-ish type of level. Not necessarily, but it does give traders a new level to lean against. A move above it, that level that is resistance, that level then becomes support, and so we'll have traders potentially leaning against this level right here, these 35 to 65 level as support, and looking for the market to move higher from there. So overall, compared to the unemployment report, we're still looking at the same type of technical levels. On the top side, a break above the 114.65 level is more bullish. On the downside, a break below the 113.23, 25 level would be more bearish for this currency pair. Now, is there any other clues in between that we might want to look at from a technical perspective? One might be this 1376 level. If the market, since we're above that level, if the market were to come back down into the 113.76 level, which corresponds with our high price going back to this day right here, then that would be a bullish sign. We're finding support buyers, and the market should move to the upside from there. So keep that level in mind, 113.76. The other level I want you to keep in mind comes off the hourly chart. And if we go back in time and take a look at Friday's close, take a look at Monday's close, take a look at Tuesday's close, we can see that each of those closes came within about 4 pips of each other. On Friday, the market closed at 113. 86. I guess that's right here. On Monday, closed at 113.86, and on Tuesday, closed at 113.83. And so that's a pretty confined area. We know that the 113.76 level is that old high going back in time to February. And we also know that the 100 bar moving average on the 5 minute on this hourly chart comes in at 113.82. So there's lots of support at 113.76 to 113.86, and so again that reinforces that level as a support level on a move to the downside after the FOMC meeting minutes. So there you have it. We have our range, our extreme at the top, we have our extreme at the bottom, and we have a level in between that will perhaps give a barometer as far as bullish above, bearish below through the meeting minutes. The rest is up to the meeting minutes and how the market interprets them. Risk is increased, so be sure to be aware of that. If you like this video, please go to our YouTube page and click thumbs up. If you don't like this video, you can click thumbs down, and you're also welcome to put comments on that website as well, and subscribe to our YouTube channel while you're at it. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.